The numbers are in, and it's clear BYD has now taken the lead in the EV world. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Today, wow, this news that has just been revealed from BYD. They have shown what their Q4 2024 financial results were, how they've actually gone as a company. BYD's revenue has topped $100 billion for the first time ever. That's huge. It means they've now surpassed Tesla. That's for 2024, for the entire year. So that's right. BYD, a company that was once seen as a laughingstock, and to be fair, Elon Musk did say that they made bad cars. He was right when he said that. Not the case anymore, though. They've completely transformed themselves. I mean, only a few years ago, they sold around 400,000 cars. Last year, well, more than 3 million. Let's break down the key numbers: revenue, profit, growth, and more importantly, have a look at BYD's actual strategy. What are they doing and why are they doing it? From vertical integration to product diversification, very aggressive pricing, and global expansion. All of that is fueling their rapid growth. Let's also have a look at what this means for Tesla and the broader EV market. BYD's numbers. BYD had a blockbuster fourth quarter. The company's Q4 revenue hit a record of 275 billion RMB, which was 38 billion US dollars. That is up 53% compared to the same quarter the previous year. To put that in perspective, growing revenue over 50% year on year at this scale is astonishing. It's rarely been done in the history of the planet. It wasn't just the top line growing though. BYD's net profit for Q4 was RMB 15 billion, which is around $2.07 billion. And that's the key here. Their revenue grew by 73%, even more than their actual earnings. Earnings, though, nearly doubled from the prior year's quarter. Now, what drove all this? Skyrocketing EV sales were the main driver. BYD delivered a record 1.52 million BYD delivered a record 1.52 million cars in Q4. That includes pure electric cars and plug-in hybrids. But most of those were actually plug-in hybrids, which is unusual. BYD used to be selling predominantly electric cars. It's now moving away from that to selling around a 60-40 split. However, that is still 61% more cars sold than the fourth quarter of 2023. So 61% growth is insane for a company this size. More cars sold translated to more revenue, and well, it really was that simple. However, there's one caveat to BYD's story: margins. All that growth came with thinner profit margins. And some people, as a result, have been doing some pretty wild YouTube videos saying that BYD could go bankrupt, which I believe is kind of ridiculous. But that said, BYD's gross margin in Q4 was around 17%, which dipped a little bit from the year before. In fact, costs rose enough that their Q4 margin was down a few points from Q3. This suggests BYD was pushing volume hard, possibly incurring slightly higher costs or keeping prices lower to drive those record sales. In short, BYD wasn't chasing fat margins in Q4. It was chasing scale, disruption. This is a theme we'll see in their strategy. Prioritize growth now, and profit will follow once we've killed off some of the competition. Even with slightly slimmer margins, the absolute profit was at an all-time high given the sheer volume of cars that they actually sold. And not just cars, they also sell a lot of batteries as well, being the second biggest battery company on the planet. Looking at the full year of 2024, BYD's results are equally impressive. For the whole year, BYD brought in RMB 777 billion in revenue. That's about a 30% increase over 2023. In US dollars, that's $107 billion in annual revenue. To put a headline on that, BYD has now officially surpassed Tesla in annual revenue. Tesla's 2024 revenue was about $97.7 billion. So BYD beat them by nearly $10 billion. BYD, though, didn't just grow its top line, it also grew its bottom line significantly. The company's net income for 2024 was 40.3 billion yen, or around 5.5 billion US dollars. That was 34% higher than 2023. That's a record profit for BYD. So we have a story here, and that is rising revenue and rising profit for BYD, a combination that any company would envy. As this chart illustrates, BYD's quarterly revenue, that's the blue line, surged past Tesla's, the orange line, by the end of 2024. BYD sales really took off late in 2023 and 2024, closing a gap that had Tesla ahead for many years. In Q4 2024 alone, BYD pulled in roughly $38 billion of revenue, which was far above Tesla's $25.7 billion in that same quarter. You can see that sharp blue spike on the right side of the graph. That's BYD's Q4 leap. This wasn't a one-quarter fluke either. It was the culmination of a trend. Throughout 2024, BYD was narrowing the gap quarter by quarter until it overtook Tesla. For the full year, BYD crossed the 100 billion mark in revenue, slightly ahead of Tesla's total. Now, this is a remarkable milestone, a Chinese EV maker topping an American EV pioneer in sheer sales. But you might be wondering to yourself, how the hell did BYD actually pull this off? That's a pretty good question. How did they manage such explosive growth within a short period of time to the point of outselling Tesla in dollar terms? Well, the answer comes down to strategy. BYD has been playing a long game and making some pretty damn smart moves. Let's break down the key factors behind BYD's rapid rise, and in the process, we'll compare these elements to Tesla's approach. Number one, vertical integration. One of BYD's core strengths is its extreme vertical integration. This means BYD makes a lot of key components for its EVs in-house rather than outsourcing them. BYD produces its own batteries. Its famous Blade battery is now being used even by Tesla themselves. It also makes semiconductors like power chips and electric motors internally. Why does this matter? Well, by controlling its supply chain, BYD can cut costs and avoid bottlenecks. Now, speaking of vertical integration, BYD now has 7 of its own car-carrying ships, which are all enormous, and can send BYD's cars all around the world without relying on anyone else. Now, during the past couple of years, many automakers, Tesla included, faced chip shortages and battery supply constraints. BYD was relatively insulated from those issues because they could fall back on their own parts to keep production surging. Vertical integration also enables BYD to innovate really quickly. A great example is BYD's new Super E platform and battery system, which the company unveiled about a week ago. It can charge a vehicle at up to 1,000 kilowatt, which is crazy. And that means you can add around 450 kilometers of range in 4.5 minutes. This is the fastest charging technology that the world has ever seen. That's twice as fast as Tesla's fastest superchargers today. Now, because BYD develops its own batteries and its own tech in-house, it can leapfrog on certain technologies like ultra-fast charging. All in all, this vertical integration strategy gives BYD a cost advantage. They're not paying markups to suppliers for batteries or chips, and a technological edge in some key areas. Tesla, to compare, is also vertically integrated in many ways. They design their own software, their own vehicle architectures, and assemble batteries with their partners. But BYD has taken it even further on the component side. BYD's tight grip on its supply chain is a big reason it could ramp up production so rapidly and so cheaply, fueling that revenue growth. Now, keep in mind as well, BYD makes almost everything in China, and it's much cheaper to do it there than it is in the United States or in Germany. Point 2, product diversification. Another big factor behind BYD's success is its product lineup. I personally have found this a little bit confusing. They have so many different models. However, that is an advantage in some ways. BYD isn't just selling a couple of car models like Tesla. They have a wide range of vehicles. Now, think about Tesla's lineup. It's basically four consumer models: the Model S, the Model 3, the Model Y, and the Model X. But Tesla really only sells two of those models around the world in most countries: the Model Y and the Model 3. Now, the new Cybertruck is just starting, but yeah, that's only available in the United States. BYD, on the other hand, offers dozens of models across multiple sub-brands. They have small, affordable cars like the BYD Seagull and the Dolphin. They have sedans like the Seal and the higher-end Han, SUVs like the Atto 3, called the Yen Plus in China, the Tang luxury EVs under the brands Denza and Yangwang, and even electric buses and trucks and machinery of all types. This diverse portfolio means BYD can appeal to many different customers and markets all at once. In 2026, BYD sold nearly 4.3 million vehicles if you include plug-in hybrids. That's more than twice the number of cars Tesla delivered. Tesla delivered around 1.8 million cars, which were all fully electric. Part of BYD's strategy has been to offer plug-in hybrid vehicles in addition to purely electric cars. Now, these plug-in hybrids have been very popular in China, where they're also very cheap. And that's also a place where not everyone is ready to go fully electric. It's like a step technology. In fact, BYD's plug-in hybrids led its sales growth in 2024, thanks to new, longer-range hybrid models that attracted buyers, and to be honest, also thanks to much better hybrid technology than any legacy automaker in the world. And it's one of the key reasons why Toyota plans on using BYD's hybrid technology in its future cars in 2026. By selling both EVs and plug-in hybrids, BYD captures customers who want a taste of electric driving, but still value the backup of a gasoline engine. The result of BYD's broad lineup is sheer volume. They're in many segments of the market, from economy to luxury, which greatly expanded their sales. More models and more segments equal more revenue, and that's been a key to BYD overtaking Tesla on the top line. It's also one of the key reasons why BYD will likely overtake Toyota by 2030 as the world's largest car company if they continue on their current sales trajectory. Point 3, aggressive pricing and market positioning. Hand in hand with its diverse products, BYD has been very aggressive on pricing. Some would say they are the biggest reason for the EV bloodbath price war in China. Simply put, BYD undercuts Tesla in, well, most markets. In China, BYD's models are always priced lower than comparable Teslas, which makes them attractive to cost-conscious consumers. But it's not just China. BYD has been expanding into regions like Australia, Latin America, Southeast Asia, Thailand, Middle East, and others, often with pricing that beats Tesla's. In fact, in at least 10 markets outside of the West, BYD's cheapest models are significantly cheaper than Tesla's entry-level Model 3. For example, BYD's compact Dolphin EV or the Atto 3 SUV can be thousands of dollars less than Tesla once you factor in local taxes, import costs, and delivery fees that Tesla charge on top of the advertised price. This pricing strategy is huge. BYD is basically saying, we'll give you an EV option that's within your budget. Doesn't matter what your budget is. Whereas Tesla has mostly targeted more premium segments until its recent price cuts anyway. BYD's ability to offer value for money comes partly from the cost advantages I mentioned previously, vertical integration and scale, and partly from their willingness to take smaller margins per car. And in some cases, I would say probably no margin in order to take market share. They seem to be playing the long game of grabbing market share from their rivals. Tesla has responded by cutting prices on models like the Model Y and the Model 3 in markets like China, the US, and Europe, which did boost Tesla's sales, but also it did hurt their margins. Tesla's automotive gross margin fell to about 16% in Q4 2024 after all the price cuts. So Tesla is now learning to play BYD's game of high volume and competitive pricing. But that's a relatively newer approach for them. BYD, having started with lower priced vehicles, is very comfortable competing on price anywhere. If they want to, they'll undercut anyone. This is a crucial dynamic, and BYD is basically effectively pressuring Tesla from below, offering good enough EVs at lower prices, which forces Tesla and, well, everyone else to adjust. And beyond Tesla, this pricing tactic pressures other automakers as well, because not only is BYD capturing huge volume in China, it's now doing so in overseas markets as well. It's even going into markets that other brands are not, such as pickup trucks with a new BYD Shark. It's proved to be a huge sales success for the company. 4, international expansion. A few years ago, BYD was pretty much just a China story. I got criticized a lot for making that point, but the truth was that for quite a long time, about more than 95% of BYD sales were just coming from China. And it was kind of, in my opinion, a risky strategy. Now, they've moved away from that recently. And BYD has been expanding internationally at high speed. Take Europe. BYD is now selling cars in many European countries, from Norway and Sweden to Germany, the UK, France, and more. They've launched multiple models tailored for Europe and have begun setting up a dealer network and experience centers. BYD's management has been very vocal about making a splash in Europe. They even sponsored huge events like last year's European Football Championships to boost brand recognition. They've now decided to build factories in Europe and around the Middle East as well. Stella Lee, BYD's vice president, said recently they expect BYD's EV registrations in Europe to climb in March and April 2025 as their push intensifies. BYD is also planning to build its first passenger car factory in Europe in Hungary to localize production. It probably will just assemble them there. European authorities, though, are scrutinizing this, concerned about subsidies, concerned about, well, China taking over Europe's car market from within like a Trojan horse. But this shows you BYD's intent. Beyond Europe, BYD has entered markets like Thailand, Australia, Brazil, South Africa, and more, often beating others to emerging EV markets. In many of these places, Tesla either has a minimal presence, sells at a high price point, or just doesn't have models in enough segments. This gives BYD a first mover advantage among mainstream EV buyers. This global expansion means BYD isn't reliant solely on Chinese demand. It's grabbing market share worldwide, and it's paying off. BYD's overseas sales are growing, adding to their revenue surge. Of course, expanding globally isn't without challenges, and it isn't without risks as well. BYD faces political and trade hurdles. For instance, there are growing concerns in the West about China's state support for companies like BYD. And it's true, BYD has benefited from significant government support in China. In fact, China has pumped large subsidies and incentives into its EV industry, helping companies like BYD to scale up quickly. It's also true that BYD is facing challenges from within. Now, BYD had planned to build a car factory in Mexico. Now, the Chinese government have overruled that plan, saying they are afraid that BYD's very advanced technology could be stolen by American companies. As BYD enters Europe and other regions, it faces tariffs and regulatory scrutiny. Just recently, some countries have talked about imposing higher import tariffs on Chinese EVs. The EU launched an investigation into whether BYD's EVs are unfairly subsidized, and then they put about approximately 28% tariff, including the import tariff of 10%, on BYD's cars, making it much harder for BYD to rapidly scale its expansion across Europe. Now, these factors will temper BYD's expansion in that region, but so far BYD seems willing to tackle these challenges head on. It's pressing forward with overseas investments and complying with local rules. The bottom line is BYD's international strategy is making it a global competitor, not just a Chinese dominator. And that scale of global presence is something Tesla now has to contend with on multiple fronts. With BYD's rise clarified, what does this mean for Tesla? What does it mean for the rest of the EV market? Well, for Tesla, BYD's achievement is a bit of a wake-up call. Tesla is still by many measures the most advanced EV maker. They have industry-leading battery technology in some aspects they don't, but they're hugely profitable. Well, they were until recently. And they built an aura around their brand, which has begun to crack recently with the controversy surrounding Elon Musk in the United States. BYD, as a result, is catching up in revenue and even beating Tesla in EV unit sales in certain quarters. Signals that Tesla's lead is, well, most likely done. Tesla will likely respond in some ways, though. First, Tesla has already begun cutting prices to stay competitive, as we discussed earlier, which helped them deliver record volumes, but at the expense of profit margins. We might see Tesla continue this high volume, lower margin strategy to prevent BYD and others from grabbing too much market share from them. Elon Musk has hinted at wanting to sell EVs at lower prices. There are cheaper Teslas coming this year, and he's saying that they can make up the profits through services or autonomy down the road. That philosophy aligns with fighting off BYD's pricing pressure. Second, Tesla is accelerating new product development. The success of BYD's diverse lineup is pushing Tesla to broaden its own lineup faster. This year, Tesla has plans to reveal or to begin selling a number of other models based around the Model Y, a 7-seat long wheelbase version and a smaller version that will be cheaper as well. In addition, they're going to bring out a much cheaper Tesla Model Y entry-level model to try and attract more budget-focused customers. Tesla has also been developing a next-generation platform for a more affordable model, often nicknamed the $25,000 Model 2, which hasn't launched yet and actually might never launch. The BYD challenge might add urgency, though, to that project. Tesla knows it needs a true mass-market car to compete globally over the next 5 years, especially in markets where a Model 3 and a Model Y are too expensive. We could also see Tesla emphasizing its technological strengths to differentiate from BYD. For instance, Tesla's brand in the West is very strong, or at least used to be anyway, and it might play up things like its full self-driving software or its supercharger network or its pretty impressive driver assistance systems, areas that Tesla does still lead over BYD. Meanwhile, other automakers, though, are watching this Tesla versus BYD showdown closely. Legacy car makers like Volkswagen, General Motors, Toyota, and others now realize the competition isn't just Tesla. They have to worry about fast rising players like BYD, XPeng, and Geely as well. This could spur more partnerships or faster EV rollouts from the traditional giants, pushing them into action, knowing that if they don't do something, they are going to literally lose millions of sales. It's telling that in 2024, Tesla's global EV market share actually shrank a bit because the surge of Chinese EV sales, not just in China, but around the world. The entire EV market is growing, but the pie is being split among more serious contenders. EV sales are increasing this year rapidly, but at the same time, some companies are really getting beaten up badly when it comes to EV sales, and others are doing really well. For consumers and the broader market, BYD overtaking Tesla in revenue is actually an exciting sign of a maturing industry. It means there are multiple big winners in the EV space, not just one. More competition usually means better prices and more innovation for consumers. That's what's happening. We're seeing more models and cheaper models and better value. We're likely to see a continued race to the top in EV technology, whether it's faster charging, as BYD are pushing, as Geely are pushing, as XPeng's pushing, longer range or advanced features, as each company tries to one-up the other, which is a net win for consumers. We're also going to see a price war intensify, especially in China, and extending to other markets, which could make EVs more affordable sooner. In fact, many experts think that EVs are going to be cheaper than internal combustion cars all around the world, not just in China, over the next couple of years. On the flip side, competition will weed out weaker players like Nissan, Mazda, and others, causing bankruptcies or forced mergers. Not every EV startup will survive either. When giants like BYD and Tesla are battling it out, others will fold, as we saw last year. But overall, the fact that BYD can challenge Tesla is proof that the EV transition is global and it's accelerating at a rapid pace. To conclude, BYD's Q4 2024 results and its milestone of overtaking Tesla in revenue highlight a power shift in the EV industry. BYD leveraged a combination of scale, vertical integration, a broad product range, very broad product range. I think it's too broad, but it is working, including those popular plug-in hybrids. In addition, competitive pricing and rapid international expansion was actually currently achieving growth at a pace that Tesla couldn't match last year. This developing rivalry between BYD and Tesla could define the next chapter in electric vehicles. For now, BYD can celebrate a well-earned victory in 2024's numbers. The big question going forward is this: can BYD maintain its momentum and stay ahead? And how will Tesla and others respond to its ongoing threat of, you might even say, global hegemony? One thing's for sure: the competition is heating up. And that's likely to drive the EV market to new heights. Legacy automakers are the ones who will suffer the worst. Stay tuned, because 2025 is shaping up to be an insane year in this space. It's going to change so quickly. Guys, thanks for watching and listening. Let me know your thoughts in the comments. If you haven't already subscribed, make sure you do so. And I'll see you again on the next video. Bye-bye.